Good afternoon, everybody. I'd like to welcome you all to the Halftime Talk feature interview. I am delighted today to be joined by Mr. Arjun Murti, who is partner at Veriten. Thank you so much, Arjun, for joining us today.
It's a real pleasure to be here. Thank you for having me.
Great. Well, we will touch on a few points, obviously, of the macro look on the energy sector, and also talk a bit about energy transition, which I know is one of your specialties, as well as sort of corporate, equity portfolios, etc. But let's just kind of pick up from a few headlines that we saw this week in Vienna. Of course, where OPEC, there's the OPEC conference, not the meeting. There's no declaration of any new cuts, but commentary by, His Royal Highness from Saudi Arabia, the energy minister, and others, and sort of offering some clarity on the negativity that is being sort of, I suppose, portrayed at OPEC these days by some people in the market, and a sort of somewhat defensive posture there, and clarifying what OPEC's up to. Give us your take on whether you think what OPEC Plus has done in the last 6 months, and Saudi in particular with the voluntary cuts moves. Do you think that has given stability, uncertainty to the market? Where would you gauge that impact?
I know it's created a lot of headlines, but I actually think these OPEC cuts and whatever Saudi is doing or not doing are really not the big issue today. I think we've seen shale production, including from the Permian, continue to surprise to the upside. And there's an inherent uncertainty about the outlook for demand. I think it's actually held up better than people have feared, but it's not crazy for people to be worried about, hey, what's really going on in China? Europe's challenging. In the US, are we going to have recession or not? And when you have some uncertainty on China, Europe, and the US, even if the data has been okay, it's not crazy for people to be worried about it. So in terms of these OPEC cuts, I get why they get a lot of attention, but I actually don't really understand it. I feel like OPEC's had a pretty good run since COVID of taking the worst of that down cycle out of the market. And I'm not quite sure the basis for the preemptive cuts. I think others you've had on the show are better experts on this, and I don't really view it as the issue. So yes, it's garnering headlines, but I think there are other things to focus on that are going to drive, is the outlook bullish or bearish, not these OPEC cuts or whatever is happening or not happening.
Yeah, and I mean, I think, and one of OPEC's arguments is that it has been quite forward-looking in forecasting, how to behave, at least it playing its part, right, in the supply equation. It has made its own forecast of demand and of recession possibilities, as you said, which are the bigger issues. We had comments this week on how they think inflation is being brought under control. So they argue that they're actually reading real market indicators out there and fundamentals, and not just playing with prices as speculators are. But let's move on from OPEC. As you said, there is...
I'm sorry, Diala, if they're doing that, then are they saying the economy is weaker than the underlying stats? Because the demand numbers have actually been okay. So yeah, it is a weird thing where they're cutting, and I know it's to maybe knock out shorts or what have you, but it is kind of a weird dynamic this go around, in contrast to what I think has been a pretty forward and thoughtful strategy in the previous 2 years.
Okay, well, that's interesting. That's good. That's good to hear. Yeah, I think that, and at the same time, they have their own forecast where they're actually saying demand doesn't look too bad in the second half of the year, but it's looks like more of a short-term sort of price support, perhaps, for the market there. And then let's talk a bit about the bigger picture, demand outlook. You mentioned China, you mentioned the U.S. economy. Actually, the U.S. and China aren't looking too bad. It's Europe that seems to be causing a bit more concern in terms of where its economy is going. What do you think is the outlook now for third quarter, fourth quarter for China? Some people are in the camp of it's disappointed, but that's maybe because expectations were too high. Others are saying actually growth figures have been as we were expecting in January.
I mean, I think these economic numbers and these oil demand numbers, I'd say they've been fine, right? We are on track to have positive oil demand growth, and that's something folks at the IEA and others have questioned. Well, maybe we've already had peak demand. Even BP had an outlook a couple of years ago calling for that. And I think that is clearly not the case. Oil demand continues to grow. There are, of course, billions of people aspiring to middle-class status. There's normal economic growth. And I think the overall oil demand numbers have been, at worst, they've been fine, if not actually kind of okay. I think what's happened is we've had some countries that had disruptive production come back online. There was an expectation Russia would fall. It didn't fall. And again, the shale numbers have surprised to the upside. And then some other non-OPEC, whether it's Guyana or Brazil, you've had some ramp ups. We've had just a little bit of a confluence of, I'm going to call it a 1-year surge in some of these other supply areas with certainly adequate demand, but maybe these things didn't surprise in the way people thought. And so it's created a little bit of a bearish downdraft. I do think we're through a lot of that rest of world supply growth, if we want to summarize it as that. And so the outlook should be for tighter markets over the next year or so.
Yeah, and some people would agree with you there. Would you subscribe? I mean, we're not into the business of asking people what prices are going to be, but where would you put your range, let's say, for the next 6 months? You know, we've been kind of hovering in the low 70s for a few weeks now, unlike the last year where we've had a lot of swings. Are we settled, do you think, into this 70 to 80 range now for the next few months, or you know, all things remaining equal?
My core view has been one of it's going to be a super volatility market, and I've preferred that language over the super cycle language. So when we've been in this environment where there has not been a lot of capex growth amongst non-OPEC producers, we generally have low inventories. In my opinion, we have generally low levels of spare capacity amongst the OPEC countries, and some of those countries may push back on some of that, but I think generally low levels of spare capacity. We're in an environment where anytime the global economy tries to grow, or you have some sort of disruption like we had with the Russia-Ukraine situation, prices spike. The challenge is in the absence of adequate supply growth, and this to me is the biggest concern looking out over the next 5 years. If you do not have a capex cycle, if we do not have supply growth, you then do not get to have economic growth. And it's a very different environment than the 2000s, where we had non-OECD booming, China joining the WTO, and you had a lot of people from Saudi to Western producers all trying to grow supply, meeting to varying degrees of success, but it allowed for a super cycle to happen. I would expect a much more volatile oil price environment this go around, and that's kind of bounded by over $100 on the upside, but then you force the demand contraction. I think the debate is this 70 to 75 the low? Historically, you wouldn't call that a trough price. You might call 50 or something a trough price, but maybe this gets into the earlier points on the Saudi cuts. If they're trying to cut off the risk of 50, then you know, I think it's to be determined whether they're going to be able to do that or not, or if 70 or 75 is really the low end here.
Yeah, of course, as they say, you know, high prices is a solution for high prices, right? That eventually that might eat into the lackluster demand, might calm that down. You mentioned capex and investment, and of course we've heard the argument that there is a lack of it in general, actually amongst probably OPEC producers rather than non-OPEC. As you said, we've had intermittent supply. But in terms of, let's talk about shale and non-shale. Do you see any more investment coming into the US space, first of all? Because, of course, we've seen that slow down quite a bit, haven't we?
Yeah, I mean, the US...
talk about other...
Yeah, sorry. I mean, the US, we're coming off a decade where the shale producers delivered a lot of growth, but they delivered it with almost no profits. Actually, from 2011 to 2020, the return on capital for a group of oily shale producers was actually 0%. I mean, zero, I don't have to get to be a financial expert to know that's a really poor level of profitability. And so investors have said, don't waste my money this go round. So there's been this theme of capital discipline. It is coinciding with perhaps some maturing of shale as well. So it's always hard to disaggregate these things. I think if we look forward to the next 5 to 10 years, if shale was 70% of global oil supply growth over the last 5 to 10 years, it's going to be a smaller percentage going forward. And the question is, what's going to fill that gap? So I think we will need offshore Gulf of Mexico, we'll need Alaska, we'll need the oil sands, we'll need other non-OPEC areas, and we'll need the OPEC countries to grow their supply. And I think Saudi's announced some plans, UAE's announced some plans, but a lot of other people haven't. And because of this decade of poor profitability, and now some of these concerns about energy transition and will demand even be there in the future, traditional investors, the Western world investors, the portfolio managers saying, don't invest, don't waste my money this go around. And we don't even know if demand's going to be there. And I think it's setting up for a pretty big supply crunch in the years ahead if it's not addressed pretty soon.
Yeah, I mean, this whole transition, energy transition versus energy security argument, how much do you think the war in Europe has sort of dislodged, if it has at all, the energy transition agenda, given people's concerns about supply and prices?
Well, I write this blog. It's called Super Spike. And the tagline is about the messy energy transition era. And I've always thought this whole transition argument has been upside down. Meaning it started with this objective of let's have net zero CO2. And I'm not suggesting that's not something we should aspire to, but you still have to meet people's basic energy needs. And we all know everyone on Earth will take energy availability over any other metric. Here in the US or Germany or any place in other parts of the world, no one even cares what they pay for it. Energy has to be there. And then hopefully it's affordable. And then hopefully it's from geopolitically secure places relative to whatever country you're in. And then lastly, hopefully it comes with better environmental attributes. And it doesn't mean we have to go in order of these things, but you can never forget energy availability. So when you start with we're going to solve for CO2, what are you saying? Only the US, Europe, Canada, and Japan, the lucky 1 billion of us, get to use disproportionate amounts of energy per capita. What about the other 1 to 3 billion people? I know you and your listeners understand this, but there are 7 billion people on Earth that use a fraction of the energy we do, and that needs to be addressed. So we need oil, we need gas, we're probably going to need coal, and we're going to need a whole bunch of these new transition technologies to meet these energy needs. But it is going to take all this energy and not just some of the future energy that I think some people argue for.
And I mean, and that certainly seems to be a kind of a reversing trend. I mean, if you look at putting NOCs here, or NOCs around the world, national oil companies, let's look at IOCs. They've made massive profits in the last couple of years, at least. These windfall gains that everyone's saying they should be plowing back into something apart from shareholder dividends. And of course, and you would say, okay, into E&P and into the energy transition investment, and they're doing everything, of course. But some have outwardly, BP and others at Shell recently have said, actually, we're gonna continue that transition, but investments. But we're going back in to hardcore conventionals. How do you think the market has received that? How do you think governments should be receiving that?
I think you've raised a really important question here, and I'm going to push back on the windfall profits language, which clearly some politicians in particular use. This is a sector that through 2020, over the previous decade, had a 0% return on capital, and then had 8% in 2021, and admittedly a very good 27% in 2022. And if you add up now the rolling 10-year average, I think we're up to like a 3 or 4% return on capital. So it's a long-term sector. And when you invest, oftentimes you have to spend 5 to 7 years in advance of getting production. Maybe for shale, it's a little less. For oil sands or deep water, it's a little bit more. The Middle East is somewhere in between. These are long-term businesses, and that long-term profitability is just getting to sort of minimally acceptable levels. So the idea that after 1 year of very high profits, it should all go back in the ground belies what was a very challenging 10 years. At the same time, the world is saying, even though it may be inaccurate, that it wants to transition. So I think has been very challenging for, frankly, politicians should just accept the fact that this sector is needed, and these companies need to earn a minimal level of profits over a cycle to warrant investment. As far as energy transition spending goes, I always push back and say, what are the examples of companies that were good at yesterday's technology being the leaders in tomorrow's technology? My simple example is, it did not take Blockbuster Video to invent streaming. We created Netflix. And there's a gazillion examples of this. We need profitable, successful, healthy oil and gas companies to produce however much oil and gas the world is going to continue to use. I think, you're based in the Middle East. I think you're very fortunate to have some outstanding companies like Aramco and ADNOC and so forth. I think as an American, which I am, it is important that we have healthy American companies, healthy Canadian companies. We would not, again, speaking as an American, want all of our production to just come from one region. It should be diversified. And I think other oil consumers are going to feel that way as well. I would say the oil companies should be in the oil and gas business. If they're logical adjacencies, go for it. And then we should look for venture capital, private equity, and other tech companies to go after the new energy technologies as a general comment. There are exceptions.
Okay. Yeah. And would you say, I mean, this whole question of peak oil demand, it keeps getting pushed, doesn't it? Forward or back, pushed later. Anyway, whatever. Some people were saying a few years ago, 2020 will be peak oil demand. Clearly not. And now we've got a 2030, i.e. how quickly is electrification taking over, et cetera, and other technologies. Would you say, and again, that's another reason OPEC now is outwardly saying, look, we've got another 10 years to go to make this money, and then it could be over. So where's your gauge on really where we could see peak oil demand across the board, in general?
I mean, I have oil demand growing at least to the 2030s. And I think even there, even if you have it plateauing there, then you're saying a whole bunch of people, billions of people are going to get left behind economically. And that's just something I can't accept as a base case that the world should be striving towards. And so the biggest miss on the peak demand forecast for this decade is in disappointment on fuel economy gains. And so in the US, if the government mandates 3 to 4% fuel economy gains, the actual number that is achieved is like 0.3 to 0.4%. We miss it by 75 to 90% because we increasingly drive SUVs. And that trend, I think one of the questions is, will that be repeated in India? Will that be repeated in Africa and other parts of the world? And so that's the big miss this decade. And I think we have to question the hockey stick on EV forecasts. I'm a retired Goldman Sachs partner. I drive a Tesla and I love it. I'm one of the fortunate people that can afford it. I can charge at home. Is that really going to be the reality of people in Africa and rural India and Southeast Asia? And I will just say there is such a European mindset to all of this discussion, and a little bit, a US probably left to center type mindset. Is that the right mindset? There's 1.4 billion people in Africa who use like a barrel a day of oil per year. In the US, we're using 22 barrels per capita per person. Like, these numbers are so stark and so bar-based. Why is it okay? And you're a Middle East-based publication. Why are we taking this European mindset as how the world should transition? What do the people of the Middle East want? What do the people of India and Africa and Vietnam and Bangladesh and Pakistan want? Why do they not deserve energy opportunity and economic opportunity, which in large part, is going to come from using oil and natural gas and probably their domestic coal?
Yeah. Well, I mean, let's put that question to COP28, shall we? And all the countries meeting later this year here in the UAE at the COP28 meeting, which of course is being hosted by an oil and gas country and producer, and which is making the point that we need to be very much part of the conversation, which is true, towards a climate mitigation, climate change mitigation. And all the better for it if that's genuine and we see some action, as you said. But there is this sort of dichotomy between emerging, developing countries and others, and that's going to take a long time to close that gap. What's your expectations from COP28 this year? At Glasgow, it was meant to be an implementation COP. Then we had Egypt, which didn't seem to create too many positive headlines, nothing neutral. What needs to be achieved at COP28, do you think, and what can be achieved?
Well, first of all, I love that the UAE is hosting this. I think more of these COPs need to be hosted by the developing world, because that is where our future economic opportunity is. Yeah. That is where future population growth is. And these are the folks that are generally consuming much less energy than, again, the lucky of 1 billion of us that live in the US, Europe, Japan, and Canada, and so forth. I think the UAE has been a role model in energy transition. They've developed a nuclear fleet. They've improved efficiency. They've got clearly oil and natural gas growing, which the world needs. And they've also got renewables and other things. I actually think they, as a country, and I give a lot of credit to ADNOC, I give a lot of credit to its leader, and I give a lot of credit to the country overall, that they've really been a role model for how to do transition in a healthy way that doesn't forget people, that doesn't impose their values on everyone else. It's like, we're going to develop a nuclear fleet. Why don't we do that in the US as an example? This is clearly a very good way to decarbonize your power grid. It's baseload power as one example. I think we need to hear the voices of the rest of the world. And so this dichotomy that you mentioned, I think it's a really important trend that is happening. I'm going to call it a good thing. We cannot have a world that is dominated by that European mindset of, here's the way it has to go. I think we need to hear the voices of folks who say, hey, we were trying to do LNG. You guys have a Russian gas outage for 3 months. You've now overbid for our LNG and we don't have it anymore. What do you want us to do? We can't afford to outbid you, so we're going to start burning our coal again. I think we need to start with, what do the people in these countries need first and foremost? Why do they only get to use 1 barrel of oil per capita per annum, and we're using 14 to 18 to 22? So a lot of room for efficiency improvement in the developing world. But I really do think it's about meeting the energy needs, again, of the other 7 billion people on Earth, as I like to call it.
Yeah, and you mentioned this is Europe, etc. We had a webinar today hosted by one of the banks here on carbon pricing, and again, how that's moving ahead, and how different regions, different countries even, need to be able to move at their own pace with that. As long as the regulation in each region, country is applicable, then it can work. We cannot expect to have a global carbon price necessarily that is implemented. But again, it creates sometimes more inequality across borders, doesn't it? You mentioned the US again, and I wanted to ask you about investment there, but in the energy transition. You've got the Inflation Reduction Act that came out last year, which has many things under it, but one of those, of course, is a big budget for clean initiatives. Do you think that's been positively taken up in the US by investors? Anything missing that should be there, which could encourage more?
I mean, I think it's been pretty well received so far. I mean, in America, we like, as they say, carrots, not sticks. And so This is one that provides subsidies and tax incentives rather than a carbon tax or something more punitive or heavy-handed regulation. And I think we'll see what comes out of it. Billions, if not trillions of dollars will be put into a variety of different technologies. What we don't know is what's going to scale up. And this is where I push back on we need to stop investing in US shale or Canada's oil sands, or for that matter, Saudi oil or UAE oil. We don't know what's going to scale up under what time frame. And the historic track record is poor. 20 years ago, I covered cellulosic ethanol producers. And of course, in the US, we currently have zero cellulosic ethanol production that I'm aware of. And so it's just a warning sign that none of these things are guaranteed to scale up. And that's why we need a lot of forms of traditional energy. What I will say is, and I don't want any of my comments to be portrayed as being against energy transition. And what I mean by that, and again, taking the rest of the world's needs into account first, if you're China and you import 12 million barrels a day of oil and from other parts of the world, and there's questions on how friendly or not friendly the world is going to be with China, pursuing an EV strategy makes sense. And I'll always say, in China, you'd rather have a coal-fired EV than either an OPEC or US shale-fired ICE vehicle, as just one example. So there is need for these new technologies. And I think it is exciting. I'm personally invested in many different transition funds. So I think there's some interesting things going on, but we still don't know what's going to scale. We know oil is scaled. We know natural gas is scaled. We know coal is scaled. Solar is growing, wind is growing. They're not baseload power. Nuclear should be what's scaling. And out of all this other stuff, I think there's a huge to be determined, which is not to say something won't work, but it's high risk stuff at this point. And people have very basic energy needs that cannot be solely dependent on high risk stuff that might or might not happen.
What's your opinion on hydrogen? I know it's a bit out of your remit, but I mean, that's obviously big new technology, not new, but that's being green hydrogen again, being proposed as a future solution again for cleaner fuels. Again, it needs scale, it needs investment, but it's being taken quite seriously.
It has been taken quite seriously, and I'm actually been surprised, and again, I'll use Europe as the example. They seem very hesitant. I get why they don't want to go back to Russian gas, and they may not have the opportunity, but they've been, I think, hesitant to sign up new LNG contracts as an example to replace that gas, and they're making a big bet that hydrogen will be there in the future. And of course, hydrogen is really a carrier or storage form. It takes a lot of energy to make hydrogen, which is why if you're going to do it, and here's why I will agree with the environmentalists, if it's not green, there really is no purpose to it. You're just better off doing a whole bunch of other things. And maybe you can carbon capture the gas and so forth. But I would not want my economy dependent on hydrogen going down the road as a definitive low-cost source of energy. Energy does need to be low cost. It needs to be affordable economic to drive sustained economic growth. And I think there is a huge question mark on hydrogen. So I will be skeptical that it is a solution within the next 10 years. But that doesn't mean there won't be some breakthrough down the road that will allow it to take a better share. But it will have to be green. I will agree with the environmentalists on that point. If it's not green, there is no point to it.
Yeah. Oh, and you mentioned Europe. How well do you think it's handled the last sort of 18 months? I can't believe now we're nearly 18 months into the Russia-Ukraine war, in terms of on the gas front, reorganizing its infrastructure ready from now on. And going forward, increasingly so, to take gas from elsewhere, and obviously stopping eventually its reliance on gas, Russian gas. Do you think people are commending Europe for moving pretty quickly? I mean, at one point desperately, but now it was a good move.
Well, Europe got really lucky with a very warm winter last year. And of course, a country like Germany, which somehow has decided to shut down its remaining nuclear plants, is now burning lignite coal, which, as far as I understand, is probably the worst kind of coal you can possibly burn. And so when people say Europe's handling it well, I'm not so sure what that actually means. I spend every day as American praying we don't go down the road of Europe. And I actually can't think of a continent that has handled kind of this whole energy discussion worse than Europe. Now, in fairness to Europe, they do need to import oil and gas from the rest of the world. So I can appreciate why they'd not want to do that. And so investing in technologies and transition makes some sense to them. But I would think nuclear would have to be a huge part of it when you're not blessed with a lot of domestic resource. So I think Europe is the example of what the rest of the world should not follow. And I think there is risk that the US goes down the European road. And again, every day as an American, we just hope that we will not follow in Europe's path.
Okay, Arjun, one more question for you about the cost of capital. Obviously we've seen interest rates go up the last year from 0 to 5%, 6% in the UK more. That's kind of tempering a bit now, and who knows what's to come, but let's assume they stay where they are. How is that impacting investment? And do you think corporate expectations of even these big, or energy companies who've done quite well in the last year, how do you assess the nervousness amongst the corporate world with this new cost of capital, essentially?
Yeah, I mean, it's another great question where I would say, at least so far, it has been surprised. One of the big surprises, and maybe just the pain hasn't been felt yet, but we've had this big ramp up in interest rates, which, even if it had been somewhat forecasted, we've had a long period of 0 interest rates in the US and around the world. And at least so far, I would say that is not the reason why CapEx has been slower to respond. I think it's the original questions of, hey, your profitability was poor as an oil company for a decade. I'm not going to believe in 1 year of good returns, or maybe shale is starting to mature a little bit. So do I really want you getting back into deep water or international expansion, I think, or exploration? These are all the kind of things that I think will come back over the next decade, but haven't yet. So whether it's the oil industry or other industries, I don't want to say the rise in interest rates hasn't mattered, because we probably just haven't had enough time with them yet. But of course, the US stock market is almost back to its all-time highs. It's driven by a handful of stocks. But so far, it's been a manageable increase, but maybe it's premature to declare victory on that. I think that we may have to wait a little bit longer to see.
Okay, and just a quick question there, like kind of related on the dollar, the US dollar, because that impacts, of course, oil and the affordability of oil and debt, of course, the big cloud hanging over the world of global debt. The US dollar direction, in your opinion, it's been pretty strong for a year or two, obviously getting stronger now with these rate rises. Some people, though, saying it's going to start to weaken against other currencies?
So I don't personally have a strong dollar view, other than I think you're right to highlight it. So when the US led the charge on rising interest rates, which also coincided with sort of the Russia invasion of Ukraine and the original COVID rebound and the move to 120, clearly the strength in the dollar made it a much worse economic impact in terms of the price of oil for the rest of the world. So I think it is one of those factors that needs to be taken into account. Now, the Fed is signaling that it's through the bulk of its interest rate increases. So if that's true, and if the rest of the world has to catch up a little bit, I'm sure that's something people with better expertise in the dollar might say would argue for a weakening dollar. But again, that's definitely beyond areas that I can intelligently talk about. So.
Okay, well, thank you so much, Arjun Murti, partner at Veriten. We have run out of time very quickly, but I really welcome you joining us today on Halftime Talk and giving us your view on the markets.
I love the conversation. Thank you so much for having me today. I really appreciate it. Thank you.